Hello everyone out there, how are you all doing? I'm Kate Hill, bringing you the best unbiased and honest content on property, along with fantastic hints and tips and area profiles. Stay tuned today for all your latest property news. Despite 2 years of continuous interest rate hikes, the Australian housing market has shown a remarkable resilience, especially in capital city suburbs. According to a report by CoreLogic, by the end of April 24, nearly 44% of these suburbs reached record high property values. This trend is particularly notable given the challenging economic conditions which typically exert downward pressures on real estate markets. CoreLogic's analysis highlights that capital city suburbs have overall fared better than most regional areas, where only 35% of suburbs achieved record highs. Now, this disparity suggests that urban areas possess unique attributes or economic buffers that shield them from the full brunt of rate hikes. The resilience in capital city suburbs can be attributed to several factors, including a high demand for housing, limited supply, and the continued attractiveness of urban living. For instance, Melbourne and Sydney have seen significant property value increases driven by factors such as robust employment opportunities, lifestyle amenities, and ongoing population growth. In contrast, regional areas, despite some hitting record highs, have generally seen a more varied impact. The difference in performance between capital city and regional suburbs underscores the uneven effects of economic policies across different geographic areas. This scenario also reflects broader trends in the Australian economy, where larger urban and metropolitan regions often exhibit stronger economic fundamentals and more robust housing demand. Not always. The findings suggest that while rate hikes pose significant challenges, certain segments of the housing market, particularly in major cities, continue to thrive against the odds. Australia's median rent has now hit $627 a week, although many tenants are paying more than that, according to more new analysis by CoreLogic. It says that the lowest median rent in Australia is $547 per week in Hobart, while the highest is $770 per week in Sydney. Rents are also rising in the regions, with a median of $550 per week. CoreLogic say that renters are being forced into more affordable peripheral housing markets as they become priced out of more desirable and central metropolitan locations. In the capital cities, Perth has had the strongest rental growth, up 13% to $669 per week in the past 12 months. Melbourne was up 9% to $589, Sydney 9% to $770, and Adelaide 9% to $589. Brisbane rents increased by 8.5% to $649, Darwin is up 3.5% to $617, and Hobart was the only market where rents dropped in the past 12 months, which was down 0.2% to $547 a week. Australia's recent 2024 federal budget includes several measures aimed at addressing the property market and housing affordability. Funding for social housing. The budget allocates $9.3 billion over 5 years for a new national agreement on social housing and homelessness. This funding is designed to support the states and territories in increasing the supply of social housing and tackling homelessness. Investment in housing. The government plans to invest more than $11 billion into housing across Australia. This investment includes various initiatives aimed at increasing housing supply and affordability. Historic underinvestment. The Albanese government acknowledges a historic underinvestment in housing, contributing to the current housing crisis. The budget aims to address this through increased funding and initiatives. So, let's see whether these actually do anything. Rising construction costs. Despite these investments, the budget has been criticised for not fully addressing the rising construction costs, which have increased by 27.5% since the pandemic. This issue remains a significant challenge for the property market. Overall, the budget aims to improve housing affordability and supply through significant investments and support for social housing, but challenges such as those rising construction costs and anti-investor policies throughout the states persist. The number of residential property listings remains tight, with SQM Research Data's latest report showing a 6.4% fall in the past month. There were 256,000 properties listed nationally in March and 239,000 in April, although the April drop was probably a result of the school holidays and Easter. They say that we are seeing a continued year-on-year rise at the national level. The number of properties listed for sale is now 5.6% higher than it was at this time last year. I'm not really seeing that, I've got to tell you. The increase was not surprisingly driven by Melbourne, with the largest increase in listings in the last 12 months of 17%, and Sydney up 12%. New property listings, so properties that have been listed within the past 30 days, also increased by 10% over the last 12 months. Victoria has, of course, introduced that new lower land tax threshold for all second property owners, which has in turn led to more investors and homeowners listing their properties for sale because they're sick of it. As the realisation sets in for all market participants that an interest rate cut is not imminently coming, we expect market caution to build over the winter months, and so do not at this time rule out some house price falls in our latest capital city for the second half of 2024, say SQM. I will keep you all posted on things property from around Australia as our year progresses. Don't forget to hit like and subscribe if you are enjoying the content, and I will see you all again soon. Bye.